Hello everyone, I hope everyone is doing great. In this video, I would like to talk about the candlesticks, basics of the candlesticks. Along with that, I'm also going to talk about the chart reading. A lot of beginners, especially in recent batches in our boot camp, so they keep on ask about basic stuffs related to the candlesticks and chart reading. Now, candlesticks and chart trading, it is very common for every market. It is not only for forex market, but also applicable for the stock market and other markets. So it is really important for the beginners to understand the chart trading and understand the candlesticks basics, so that you can excel your in strategies which you are going to learn in the boot camp. That will be helpful if you understood the basics. So okay, that's the reason I'm making this video, and I'm not going to talk about the pips, points, and mt4 mt5 today. Maybe in the different video I will discuss about that, but this is purely a technicals. So we are going to talk about the candlesticks, right? So now I opened the tradingview.com. You guys know that tradingview.com it's a charting platform where you can able to see the different currencies, different stocks, different crypto coins, and even the indices, their charts and their price action, everything you can able to see here in the tradingview.com. It's a third party application. It is like it's not a broker, it's a charting platform. They provide the charts and the data. So by analyzing the data, we'll be trading in our broker account or in our funded account. Okay, now what you need to understand here is, just like tradingview.com, there are so many websites available. For example, investing.com is one more website, investing.com. And there is application called chart inc, chart inc. And there is an application called go chatting. These guys are charting platforms. Okay, charting platforms, they provide the data for the user to analyze and take a trade based on the analysis. Okay, so investing.com, go chatting, and charting, and trading view, and more websites, even including MetaTrader, and including your broker terminal. For example, if you are trading Indian markets, you have Zerodha, Angel One, what else, Upstocks, 5 paisas. So many brokers are there, right? So the brokers do provide their own charting platform. And so charting platforms are different, but the concepts are same. Okay, that's the reason I'm only choosing the trading view, because trading view mostly available with every single broker. Okay, every single broker, Indian broker, I'm telling, Indian markets, I'm telling. For a forex market also, some of the brokers are providing tradingview.com. Okay, so tradingview.com, it's a paid application, but it has a free version. You can use the free version. It's more than enough if you are going to use smart money strategies. Free version of tradingview.com is more than enough. But if you are an indicator based trader, if you are trading based on certain other strategies, then you may need to purchase the tradingview.com. It is costlier. I mean, 1500 rupees, I believe, every month you need to pay. So I would say that use the free version. Free version is more than enough. If you're a complete beginner, free version is more than enough. Okay. So once you go to the tradingview.com, you can see products here, and you can see super charts. So just click that. Once you click that, you can able to see the candlesticks chart here. Okay, you can able to see candlesticks chart. This is called candlesticks. Green and red is called candlesticks. And also you can able to see the watermark here. It says Euro AUD 1 hour, Euro Australian dollar 1 hour time frame. Okay, so first we need to understand the tools which is there here. You can see here, there's a batching here. That is my login ID, email ID, that email ID of DP of my email ID. And there's a search option here where you can search the different assets. For example, if you're trading forex, you can choose different forex currencies. If you're trading stock market, you can choose a specific stocks here, indices, specific indices here. Okay, so whatever you trade, you can search here, you can get that information. We'll cover that in a minute. And you can see here there is an time frames here: 1 minute, 5 minute, 3 minute, 15 minutes. In default, you will not see this. You can see there is an arrow mark here, right? If you click that arrow mark, you can see different time frames are there. Whatever time frame you want, you can click the star here. By the way, that time frame will be added here. So if you don't want, you can remove that also. If you remove the stars, the time frame will be removed. Okay, but if you want, you can click star button here. You can get those time frames. Some of the time frames won't be available because that is peculiarly available only for the paid versions. So 1 second charts until you cannot see here. If I click here, okay, it is there, it is showing, but I'm not sure whether we can able to use it. Interesting. Yeah, it is not showing, right? You can see here it's asking you to purchase the paid version, so that is not required, to be frank. So free version is more than enough. So whatever time frame you want, you can add here. Okay. And apart from that, you have indicators option. If you want indicators, if you're indicator based trader, you can use the indicators, and replay options, all those functions are there here. And in the left hand side, you can see the drawing tools are there. We'll cover this in later. It's a very basic stuff. Drawing tools like markings and the rectangle boxes and all those stuffs, you can able to do it. Now the very important thing is, it's not a platform, because platform, every platform have the same kind of tools and what do you call the facilities. We want to know what is happening inside this. This is more important. Okay, it is not about time frame, it is not about the drawing tool, indicators or replay functions or whatever whatsoever. It's about what is happening here and how we are going to react to that. Okay, so in general, uh, the candlestick charts, it's look like it's created randomly, but it's not. Every movement is a calculated movement. Every movement is based on market algorithm. So all these green red candles are not casually created or randomly created. It's all created based on the market algorithm, based on the smart money, and based on the buyers and sellers involvement. Okay, so the three factors are involved: market algorithm, smart money, and retail buyers and retail sellers. Okay, so these three I can say three participants are there in the market. uh, to be frank, market algorithm is not a participant. It is like it's like a software functions 24 into 7, 24 into 5 in case of forex market. In case of stock market, it is 5 days in a week, right? 5 days in a week, and 8 hours, 7 hours, depends upon which country you are living. So generally 24 into 7 for a crypto market, 24 into 5 for a stock forex market. Stock market depends upon the market timings, and depends upon the countries also. Okay, so market algorithm. What is market algorithm? Market algorithm is a programming or software. I can say software or programming. The program or software, it's keep on functioning from the computer server of the market. Okay, so that has certain rules and regulations. Based on that rules and regulations only, that software is runs. Whereas the smart money uses the algorithm very well. Whereas the retail trader, mostly retail traders also try to decode the market algorithm, but eventually they fail, because the market algorithm is used by the smart money well efficient way. So as a retail trader, we need to follow the smart money trader. We should not try to follow the market algorithm, because it is difficult to understand the algorithm. Okay, so as a retail trader, we need to follow the smart money. Okay, smart money generally follow the market algorithm. All right, so whatever you are seeing here, we are calling it a candlesticks chart. You can call this a bar chart. You can choose different chart types. You can choose bar chart here, or line chart here, candlestick chart here, Hikanashi candles. So many charting charting tools are available. If you click here, you can see bar chart. Let me delete this. bar chart, candlestick chart, hollow chart, volume candle, line, so many type of you know data representation tools available. We need to understand market is all about the data. Market has the data. Market algorithm having the data. What data? Buyers and sellers data. Okay, when the buyer put the buy entry, that data is stored into the market computer, market programming. When sellers sell the particular asset script, that data also stored into the market algorithm, market computer. So whatever you are seeing right now, it's a data representation. Data is represented as candlesticks chart. Okay, if I choose a different chart type, data is reflected at that chart type. Okay, so candlesticks charts we are generally using because it is easy to analyze and understand. That's the reason. Otherwise, you can try with the different chart types also. That is also your choice. But that need a learning curve. But candlestick chart is really easy to understand. So that's the reason we are using it in common. Okay. Now, the job of the main job of the technical analysis, or the trader, retail trader. What is the main job of the retail trader? Retail traders always wanted to understand how market is performs. There is a difference between this big player and a retail trader. Big player, the smart monies, they play around with the huge data. They play around with the quantitative aspects of the market, fundamental aspects of the market. Market is not only about the reading the candlestick chart, but it is also related. It is also functions based on the fundamental analysis. Like a GDP of the country, inflation of the country, interest rates, and balance of payments, balance of receipts, and GDP, and so many factors, so many macroeconomic factors are the deciding factors of the smart money. Smart money is buy or sell. But as a retail trader, we don't have access to those information. Even if we have access to those informations, we cannot interpret the data, and we cannot trade based on the data. That is a challenge which is there in front of us. So that's the reason we are using the technical analysis. That's the reason we are looking into the chart reading. Chart reading is the main way of trading, main way for trading the retail traders. Retail traders trades based on the chart reading. So how do I read the chart? So now I can see the chart here. It says Euro AUD 15 minutes, right? 15 minutes, 15 minutes. Euro Australian dollar. Now how do I read this chart? Understand one thing. We have a two color candles, green and red, right? First of all, we need to understand what is candles. Now, a lot of people, when they get into the trading business, they try to memorize the candlesticks names. We should never do that. We should never do that. That's the main reason we couldn't able to trade successfully. If you want to be successful in trading, never try to memorize the patterns, never try to memorize the candlesticks names, and never look the market from your perspective, and also never have a fixed idea. A lot of people say that, oh, I want to see the head and shoulder pattern. Once the head and shoulder pattern arrived, I'll be trading. Don't ever think like that, because you you may not get what you want to see. You may not get what you want to see, but market creates something else. If you understand the price flow, the market flow, you can easily you can easily mingle with the flow of the market, and along with the market you can able to trade. But a lot of people, what they do, I want to see the head and shoulders. Once the head and shoulders created, I will be selling, I'll be buying, whatever. Okay, they'll be waiting for this pattern to create, but never do that. Never wait for the market to create the patterns, because it's a textbook example. Textbook example you cannot find in the real market. Real market, you will not see the head and shoulders, you will not see the cup and handle, or you will not see the what you call butterfly pattern or bat pattern. Okay, it is very difficult to find the patterns in the chart. So don't go with the memorized idea. Don't go with the school mentality. In Indian education system, what we do is we mug up the textbook, whatever teacher told, we memorize the topics and we just vomit in the exam paper. So if you are in the same mindset in while you are trading, no, it is not going to work. Okay, so don't ever memorize the patterns, memorize the terminologies, and come to the market. Understand the logic of the market. Mathematics, if you memorize the mathematics, no, it will not sustain. But if you understand the logic, you can apply the mathematics any area of your life. Okay, similarly, you need to understand the logic behind the candlesticks. That is important. Okay, now what is the logic here? Very simple logic. In market, there are buyers, there are sellers. Buyers keep on buy, seller keep on sell. Buyers, when they buy, what happens? That is the question you need to ask. Whenever people buy, what happens? The the price of the product will be increasing. Example, if everybody buy one product, what happens? The price keep on increase. The product value is increase. The demand for the product, demand will be increasing for that product, and price will be increasing for that product. Okay, so the same logic applicable here in the market also. When you see the green color, you can see here green color, right? Green, green, green. Lot of greens are there. When you see the green color, you need to understand that people are buying. People are buying. When people buy, price increase. When price increase, more people buy. How I am saying? Because the value of the product, it's correlated with the price of the product. If higher the price, quality will be higher. That is the psychology behind the highest prices. Lower the price, people think that it is cheaper. It is cheap knowledge or cheap product. That is also a wrong psychology, but in general, people tend to buy for the highest price. If prices are higher, no, so people feel that okay, prices are higher, so means that product have the value. So that kind of psychology is behind the highest more people buy when prices are increasing. The same is opposite for the red candle. When you see the red candle, people are selling, and when people sell continuously, the price of the particular asset is going down. When price goes down, many people think that the value of this asset is going down, so I don't want to keep this asset in my account. I wanted to uh, cut my losses. So what they will do is, when prices goes down, they will sell more. So they think that value is going down, demand is going down, though, so they will be selling. Now opposite also happens. When price go cheaper, 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 many people wanted to buy at cheaper prices. So that is also happens. But in general, if you see the green candle, people are buying, and the price is increasing, value is increasing. If you see the red candle, people are selling, price is decreasing, value is decreasing. Okay, this is the very logic behind the candlesticks movement. The colors of the candle. Okay, now you can see the candlesticks. So what is candlesticks in general? you know as I told you guys, candlesticks is nothing but it's a kind of a tool. It's a data representation tools. Instead of candlesticks, you can use line chart, you can use bar chart, you can use a pie chart. Different chart types also available, but candlesticks charts are often easy for us to analyze the market. So that's the reason we are using candlestick chart. Now just see this candlesticks, each candlesticks. We have a green and red candlesticks. Colors you can change it, that is completely your choice. Green means we are saying bullish candle or buying candle. Red means we are saying bearish candle or selling candle. So green means green equal to buying slash bullish candle. Red means selling slash bearish candle. Now I don't use the bearish bullish words generally. If you are already my student, you already know that I don't use these words very often. I use only selling candle and buying candle, or green candle or red candle, because it doesn't really matter, guys. The terms, bullish term, bearish term, no, that is not important. The logic is important. Okay, many people are fail to understand this. They straightforward buy the book called Candlesticks Patterns book, price action based trading. So they buy the book, or they consume the content related to the candlesticks in the internet. That is not necessary. Okay, you need to understand the logic is important than a terminologies is it's time consuming. It's going to give you the confusions and a lot of those things. So better understand the logic of the candlesticks. Okay, green means buying candle, red means selling candle. That's it. Bullish, bearish, if you want you can use it. I don't use those terms. Okay, now, so what how candlesticks is formed, you can see here. uh, we have a red candle here, and we do have a red candle here, we do have a red candle here, we do have a red candle here, we do have a red candle here. Now see this red candle, all are red, but the sizes are different, right? The candle sizes are different. Okay, one candle is small, one candle is big, one candle is look like this, other candle is look like this, other candle is look like this, other candle is look like this, and some other candle look like this. Okay, some candle look like this, some candle look like this. Different formations of the candles are there, and some candle is very big also like this. So now each candle have a name, each candle have a name, but again I want to tell you here is, you don't want to memorize the name. Okay, because if you started to memorize the name, no, you will be sticking with the name only. You will not understand the logic. You want to understand the logic of the candles. Nothing but logic you need to understand. Okay, it can be hammer candle, inverted hammer, head and shoulders, what do you call the doji candle, marbosu candle, whatever the names. So many names are there. The name is not a matter. Name is not important. If you are a beginner, don't get overwhelmed with these names. The name is doesn't really matter. Okay, don't memorize the names. Don't memorize the patterns also. Don't try to memorize these patterns. Oh, this is hammer candle, this is hanging man candle. No, it's not necessary. Not necessary. Okay, forget those names and everything. You need to understand two phenomenon of the candlesticks. Two phenomenon. So let's say there's a candlesticks here. Okay, let's say this is a red candle, or let's make it a green candle. Green candle. Green candle, and there is a red candle. Okay, it can be any size, bigger, smaller, any size, but that doesn't really matter, guys. So green means buying candle, red means selling candle. Okay, so every candlesticks have a two portions, candle body and candle wick. So if you see here, there is a kind of a stick will be there here in the top and bottom. Okay, so candlesticks is both this rectangle portion and both this stick portion. Collectively we are calling is a candlesticks. Okay, so what is this? The green portion is called candle body. Candle body. Okay, let me type it out here so that you can able to easily understand. So the green portion is called candle body, and this can be red color or green color. Green color means buy, red color means sell. Okay, candle body, this what do you call this rectangle portion, whereas this stick portion, kind of a line, right? This is called candle wick. Wick and body. Wick is what, you can call this wick, or you can call this shadow. Again, I don't want to give the terminologies because that is going to confuse you guys. Stick with one word, wick, shadow, or you can call this tail. So body, head, you can say head. Above the head you have a wick, right? There is the bald guys can wear the wick, right? So candle body, candle wick, something like that. You can have it. So this is in the top portion, so it's called upper wick. If it is in a lower portion, it is called lower wick. Upper wick, lower wick. Upper shadow, lower shadow. So something like that you can call. So candle body, candle wick. Now everybody knows this, right? I know that, sir. Already know that, sir. Candle body, candle wick. I know that. But what you need to understand here is the logic behind the candle body, logic behind the candle wick. What is the logic behind the candle body? What is the logic behind the candle wick? That is important. So let's say it's a green candle. Green candle means what? People are buying. The meaning is people are buying. Okay. So when people buy, what happens? When people buy, price increases. Price increases. So let's say a share price is 10 rupee. Let's say share price is 10 rupee. There are people buying. 1000 people are buying. When 1000 people buy, what happened? The demand for the share is increasing. So price become 11 rupee. Again some 1000 people are buying. The price is increasing. It becomes 12 rupee. Again people are buying. It becomes 13 rupee. Okay. So what happens? When people buy, price increase. So price increase means price will be at particular price. From that it is going up, right? From 10 rupee it is going to the 13 rupee. So 3 rupee increase is happening. So whenever you see green candle, you need to understand that price is going upside. Price is increasing to the upside. So this is just opposite for the red candle. So in a red candle means people are selling. When people sell, price decreases. Let's say market price was, share price was 10 rupee and people are selling that share. When they sell, what happened? Price decrease. Let's say it's decreased to 9 rupee. From 9 rupee again it is going down 8 rupee. From 8 rupee again it is going down to 7 rupee. Okay. So in a red candle price is decreasing, in green candle price is increasing. And in other words, in a green candle people are buying, price is increasing. In a red candle people are selling, price is decreasing. Okay. So in this body portion of the candle, so in this rectangle portion, what is happening? Let's say people are buying, price is increasing. People are buying, buying. So price is increasing. Okay, just opposite here. People are selling, price is decreasing. In this body portion, what is happening? Buyers are buying. If it is a green candle, buyers are buying. If it is a red candle, sellers are selling. Okay, that is what happening. In a nutshell, I can say within the body only buyers present. Buyers present in the body of the candle. So let me type it out here so that you can able to understand this clearly. Let me do that. In a green candle, body portion, buyers are buying. Okay, buyers are buying. When they buy, price increasing. In a nutshell, body of the candle is equal to pure buyers or pure sellers. What do you mean by pure? Only buyers are buying, only sellers are selling. Okay, body of the candle equal to, if it is a green, it's a pure buyer. Okay, I'll give the bracket. Green means pure buyers, red means pure sellers. pure sellers. Okay, in a green candle, body portion, body portion of the candle, body portion of the candle, body portion of the candle, buyers are buying. When they buy, price is increasing. Price is increasing. Okay, so in a red candle, body portion of the candle, sellers are selling. When they sell, price is decreasing. Okay, just try to understand this. Watch this video maybe twice, so you'll get some idea. So now in green candle, buyers are buying. In red candle, sellers are selling. So now where is the green candle starting? It is starting here. Exactly, the rectangle box is started here. It is starting here. Why I am saying here it is starting? Here the green candle is opening or starting, because green candle means buyers are buying. When buyers buy, price increase means it will be in ascending order, right? So from 1 rupee it is going 5 rupee. It's an ascending order, right? So it start from the bottom, end in the top. So green candle always start here, open here, open here. Let's say 1 rupee it is opening, and buying, and closing here, closing here. Let's say 5 rupee it is closing. 1 rupee it is opening, 1 rupee it is starting. From 1 rupee, why it is increasing? Because people are buying. People are buying, so the price is increasing to 5 rupees. So green candle always opens in the bottom, or in other words, green candle always open at cheaper price and close with costlier price. From 1 rupee it is starting, closing by 5 rupee. Cheaper price it is opening, closing by costlier price. So only then you can say that it's a buying candle. Buying candle. Okay, opening and closing. Whereas the red candle, just opposite. Just opposite. Red candle means what? People are selling. When people sell, what happens? Price decreases, right? Price decreases. So it will be in a descending order. Descending order. Red candle always open at top price. Costlier price it's opened, let's say 10 rupee, people started to sell. When they started to sell, price goes down. Goes down and it become 5 rupee. 5 rupees. So red candle always opens at top, open here and close here. Okay, red candle always open in the top, green candle always open at the bottom. So green candle means ascending order, red candle means descending order. I believe everyone know ascending and descending order. In school days you studied it, right? In elementary schools you would have studied ascending order. 1, 2, 3, 4, 5, it's an ascending order. 10, 9, 8, 7, 6, it's a descending order, right? So price is increasing, ascending order. Price is decreasing, descending order. Okay, just keep it in your mind. Now this is about the candle body. Now let's talk about the candle wick. Candle wick. This is also very important, guys. You need to understand. Uh, in our boot camps, we'll be learning the wick-based strategies, which is really powerful. And some of you guys already attended the boot camp. You know that how powerful the WBW strategy is. Okay, so for that you need to understand the wick also, right? So since it's a public video, I'm going to talk about the very basic stuff about the candlesticks. I'm not going to talk about the strategy, but the very specific about the candlesticks. Right, now let's see the wick. This is wick, right? Upper wick, lower wick, upper wick, lower wick. Now I told you guys, there is a pure buying and pure selling is there in the body of the candle. Body of the candle is nothing but pure buyers and pure sellers. Only buyers and only sellers. Pure means nothing, guys. Only buyers are buying. Only sellers are selling. So that is called pure buy, pure sell. Whereas in the week, you need to understand that week is equal to, very simple language, week is equal to both buyers and sellers. Buyers and sellers combinedly there in the week. Combinedly there in the week. Okay, whereas the candle body, only buyers are there or only sellers are there. Depends upon the color. If it is a green color, pure buyer. If it is a red color, pure seller. Whereas every week of the candlestick chart have both buyers and sellers. Both buyers and sellers. How? Let me see here. Let me tell you here. So let me move it a little bit. Let's say a 10 rupee, from 10 rupee people are buying. Let's say buying, prices increasing, buying, buying, buying. Okay, price is increasing and it becomes 15 rupee. 15 rupee. Okay, from 10 rupee a stock is opened and 15 rupee it is closing. Let's say it is there in 15 rupee. Now what happens? Some people will be, okay, I don't want to buy this product, I want to sell. So some people can sell here, right? They can sell at 15 rupee. When they sell at 15 rupee, price goes down. Let's say it goes down till 11 rupee or 12 rupee. 12 rupee. Okay. So now what happens? People are buying. They started to buy from 10 rupee and price moved to 15 rupee. As soon as it's moved to 15 rupees, some sellers are entering here. Sellers entering and they are selling. And they are selling and they stopped here. Okay, now this is in a arrow format, right? But if I do this in a pictorial format, so in a candlesticks format, how it would be created? So let's say from 10 rupee, there is a, from 10 rupee to 15 rupee, there is a green candle, right? There is a green candle. So let's say from here to here, it's a green candle. Let's change the color into green. Okay, it's a pure buying, right? Green candle, something like that. And exactly at 15 rupee, some people started to sell. So what will happen? Sell means a red candle, right? From here to here, it's a red candle. So you have one green candle and another red candle. Now, let's say everything is happening in a 1 minute time frame. Okay, this from 10 rupee to 15 rupee happened, let's say in 5 minutes it happened. It took 5 minutes. 9 o'clock, 9:15 market is opens. Okay, 9:15 market opens, Indian market. 9:15 a.m. is market opening, and 9:20 a.m. it's the first 5 minutes candle, right? That is this candle, 5 minutes candle. Okay, first 5 minutes market moved 5 rupee. 5 rupee up movement, right? Price is increasing, people are buying. And second 5 minutes, what happened? From 15 rupee it becomes 12 rupee. So 3 rupee down movement happened. First 5 minutes 5 rupee up movement, second 5 minutes 3 minute down movement. 3 rupee down movement, sorry. 3 rupee down movement. Okay, now I'm watching this in a 5 minute chart. 5 minute chart. Suppose the same chart, if I look at into the 10 minutes, then this chart will look like this. This chart will look like a green portion like this, and there is a wick portion in the top. So 5-minute chart, 5-minute chart, but this is the 5-minute chart. But if I go to the 10-minute chart, these two candles combined together, it will become like this. So what do you mean by that? From the first 15 minutes, pure buyer was there. First 5 minutes, pure buyer was there. Then second 5 minutes, some pure sellers participated. Okay. Now the same chart, when I look at into the 10 minutes time frame, the buyers and sellers both are what do you call? I can say that both are compromised each other, right? Neutralized each other. Buyers is neutralized by the sellers, or I can say buyers are got sellers. Buyers got sellers, or I can say buyers are neutralized by sellers. So in that portion will look like a wick. Exactly this portion. Let me delete this. Exactly this two candles combined together, these portions of the two candles combined together, wick is created. So wick is created based on buyers and sellers. Kind of equal. Both guys are kind of equal here. So in this area. Okay, now I have to say that in 10-minute chart, this portion is a pure buying portion, whereas this portion is, in this portion, wick is created, and this portion you have to say buyers equal to sellers. Whereas here only buyers are there, pure buyers. Whereas here in the wick, buyers and sellers are equal. Okay, so this is naturally happens. The wicks are very naturally created by the market. Why? Because not everybody thinks in the same way, right? 9 o'clock, 9:15 market opens. You may want to buy, but some other people want to sell, right? Because every nooks and corners of India, people will be trading the stock market. People will be trading the forex market, right? And forex market, every nooks and corners of the world, right? 24-hour market. So not every single minute. Um, I mean, people are not in the same page. People are not in the same page. I maybe look for buying Euro AUD. You maybe look for selling Euro AUD, and some other guy would be looking for buying. Some other guy would be looking for selling. So all around the world, people either buy, sell, or they do both in every second. Every second they do both. Every second they buy. Every second they sell. So naturally, market will create the wicks, because I am buying. When I buy, green candle will be created. Okay, green candle will be created. Let's say I'm buying 9:15 exactly. 9:15 exactly I'm buying. Green candle will be created. For my buy entry, green candle should created, right? And exactly 9:15 you are selling. So red candle will be created. For your sell entry, red candle will be created. Right? So let us talk about only two participants. In exactly 9:15 you are buying, I am selling. Only two people. In that situation, what happened? For my buy, green candle will be created. For your sell, red candle will be created. So both are, if I see in a 2 minutes chart or 2 second chart, it will look like a wick. It will create a wick like this. Okay, so wicks are nothing but buyers and sellers are equally present in the wicks, or I can say wicks are created because of the battle between the buyers and sellers. Buyers and sellers are buying, selling, buying, selling, selling, buying, right? Whoever wins, according to that, the body will be created. So here in this case, first buyers buying, 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 right? And sellers selling, 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 selling. But naturally, you can see buyers are higher, right? Because candle size is very big. Seller candle is very small. So if I combine the two candle, it is still green candle. It is still green candle, right? So means what? Still green candle means still buyers are dominating here in this candle. Even though sellers are there, buyers are still dominating. So something like that you can arrive. Now many people try to mug up this. Don't try to mug up this. Understand the logic of the candlestick. Now let me go to the Google images. Maybe I will type like this: candle strength, strength, not indicator, candle strength. Yes, this is the image I was searching. Now you can see here any images we can take. Let's take this image. Hold on a minute. Let me. Okay, let me open this in the new tab. Alright, you can see here. I'm not sure this image is looking good. Looking good image will take. Maybe this one we can take. I think this one we can take. It's not about the color, it's about the the pattern.
Why is it that some people?
Okay, it's going to the YouTube. Not necessary. Okay, let me open this maybe. I think it is somewhat visible to you guys, but you can see here simple logic here. We can see the candle here. It's pure green. Alright, there is a slight disturbance from my end, so that's the reason I have to cut through the recording. Alright, now what I was discussing here is, you can see here a green candle, and you can see there is a candle without a wick. There is no wick here, there is no wick here. Okay, there is no wick here, there is no wick here. So which means it's a pure buying candle, it's a pure selling candle. Okay, let me change the color. Pure selling candle means what? There is only buyers are there here, only buyers present here, only sellers present here. Okay, whereas if you see this candle, these two candles, let's say this two, how these two candles would have been created. So for example, let me take a red color. So let's say there is a red candle like this. Okay, then let me take a green color. Is it possible to take a green color? I don't have a green color, so maybe I can take a blue color. Okay, just there is a blue color like this. So this is the red color, let's say red color candle, this is the green color candle. Okay, for imagination, just understand the logic. Let's say this is 1 hour candle, this is also 1 hour candle. But when you watch this chart in a 2 hour chart, it will look like this. So this red and this green portion is neutralized. Now it will become like this. So you can see here, first the sellers selling the market, they were selling in this red candle. Then immediately buyers came in, they started to buy. So obviously selling candle is small, buying candle is big, right? So when you see this kind of candle with a large wick in the bottom, you can easily say that this is buying pressure. There is a buying pressure. There is a buying pressure there. That's the reason the long wick is created. More people started to buy. They increase the price. Okay, so this pattern is a bullish pattern. Of course, this is like, you can clearly see that this is naturally a bullish pattern. Even though it has wick in the both sides, naturally it's a bullish candle. Okay, and if you come here, this is naturally a bearish pattern. So what about this? This is the bearish pattern. How it's a bearish pattern? So it is like same like this, but just opposite. Let's say there is a green candle. Let's say there is a green candle like this, and followed by a red candle like this, something like this. Okay, sorry about my drawing. Very funky. Red candle. Okay, now it's a 1 hour candle. This is also a 1 hour candle. So if you are watching a 2 hour chart, in 2 hour chart, how it will look like? It will look like a wick followed by the red candle. Okay, so it's purely, you can see that red candle is bigger than the green candle. Means buyers Buyers were there here, buyers were buying, and they have been dominated by the sellers. Market went down, so obviously it's a bearish pattern, selling pattern, or I can say it's not a selling pattern, selling pressure. I can say selling pressure. Okay, so this is naturally a selling candle because you can see it's a green red candle, small wicks, naturally selling thing. And what about this? Now this is called, people famously call this as a doji candle, or what do you call, spinning top candle in a traditional price action they call this, but it is nothing but a indecisive candles, or I can say the both guys are equally present. In a simple language, I have a green candle. Let's say I have a green candle, sorry, red candle first, then followed by a green candle, like this. Okay, now if you see this, that will be equal to this. That will be equal because both guys are equal, right? Pretty much equal. Okay, generally the pressure is happening from the upside, people are selling, downside, people are buying. When they sell, when they buy simultaneously, the candle body will be really small, the wick will be really big. Okay, so the both candle is a indecisive candle, means here both buyers and sellers are fighting each other, very tough fight. Okay, very tough fight here. Okay, so this is the indecisive candle. We can say that buyers, neither buyer nor seller is dominating here. I mean, both are equally dominating, both are equally present here. Okay, that is an idea here. Now this is again, we have a first buying candle, and followed by what do you call, selling candle, like this, something like this. Let me change the color. Buying candle first, very big buying candle, and again you have a selling candle like this. Okay, now both are combined together, it is created still a buying candle is created. Now this is also a selling pressure. We can see here, the market was going up, but sellers are try to push down the market, but they failed, they couldn't able to sell sell further. They failed here. So eventually it's a green candle, but you need to understand that selling pressure is there. Okay, here it look like a red candle, but it is not a red candle. It's not a red candle, it's a uh, buying pressure candle. Buying pressure is still there. So let's say there is a red candle like this, and next candle is a green candle. Okay, green, not a big green candle, but maybe like something like this, small green candle. Okay, both are combined together, you will get uh, something like this. Okay, something like this. Oh, sorry, I have given wrongly. I'm sorry. This is like this, right? Okay, so this is look like a red candle, but it is not a red candle. There is a pressure of buying here. There is a buying pressure is created here. So buyers are entering, we can say. So understand this. We have a four different, one, two, three, four, five different pictures are there here. So you need to understand this. This is pure buying pressure candle, pure buying pressure, pure selling pressure, and this is again, I mean, this is the pure buyers and pure sellers, and this is the buying pressure candle. This is a selling pressure candle, and this is buying candle, normal buying candle. It's normal selling candle, and this one is both buyers and sellers are equal. They are fighting each other. They don't have any. We don't know what will happen next. Whether it will be going up or going down, we don't know. Okay, so this is look like a buying candle, but it's a selling pressure candle. It's look like a selling candle, but it is look like a originally it is a buying pressure candle. So this is pure buy, this is buying pressure, this is selling pressure, this is buying candle, normal buying candle, this is normal selling candle, this is indecisive candle, there is no decision. We don't know what happened next when you see this kind of candle. And this is look like a buying, but it is selling. This is look like a selling, it's a buying. Okay, so these are the things you need to understand. You need to don't memorize this. Don't memorize this pattern. Don't memorize, because market won't create this pattern. Market will never ever create this kind of exactly picture perfect format. Okay, it will be creating some different formations. So according to that only you need to decide the market direction or market movement and everything. Chart reading mainly. Take a chart. Let's take a chart. Let's go here. Let's see here. You can see here there is a candle here. Okay, it's look like a candle body, small wick, small wick. Now it's a pure buying pressure candle. We can see that it's a green candle. Also, you can see market first went down and market gone above. So that what happened here. Buying pressure candle. So you can see buying pressure. Even though it's a red candle, it's a buying pressure candle. Okay. So this is also red candle, buying pressure candle. This is red candle, selling pressure candle. This is a green candle, but a selling pressure candle. Right. So when you combine all those stuff, the logics you need to combine. You should not memorize the pattern. Just understand the logic. Understand the logic. What kind of patterns are created here, and according to that, you can say that, oh, what can happen next. You can try to figure out that. So let's say here, you can see the candle here. It clearly shows that selling pressure here. Okay, so next candle you can see market started to go down. Now you can argue that there is a buying pressure it's created here. Yes, of course it will be created because market inside the range market, so that's why it is creating. But in general, if you see the candlesticks, whenever it creates the pressures, right, it tend to react to that pressure. Market will be going to that direction after the pressure. So one important thing you need to understand here is always try to look the candlesticks patterns in the higher time frame charts, like a daily chart, weekly charts. So that will give you more understanding, because 24-hour pressure is bigger than the 1 minute candle pressure, right? So just see here, this is the daily candle of Euro AUD. You can see this candle. This is purely buying selling pressure candle like this. It's a green candle, but still we can see that it's a selling pressure. It happened on when? This has happened on 14th of May. Next day you can see it's a pure selling candle, and after that also it's a selling candle, but little bit buy and selling. Till now it is selling. Okay, so what we need to understand here is the the pressures of the candlesticks patterns. When the candlesticks pattern is created, you have to try to decode why this is created and what is happening inside of that. That is the context you need to learn. You should not memorize the things. Instead, okay, it is created this kind of candle here. It can be any name. You can give any name: hanging man, hammer, whatever name you want to give, you can give. Okay, but the logic you need to understand. Okay, this candle is created. Why it is created? We don't know why it is created, but we understand one thing, that in this candle sellers are putting the pressure. Sellers are putting the pressure. In this candle, sellers are putting the pressure. Okay, that you are try to understand. That is the thing you need to try to understand. Okay, so that logic is important than the pattern name. Pattern name, whether it is working or not working, that is different story. But try to understand the pressure which is build in the candlesticks. Okay, great. So how do we read the charts? Based on the candlesticks, based on the candle movement, based on the price movement, we'll be reading the charts. And the candlesticks are the core important thing to understand the market flow. So try to use the candlesticks charts often, and try to understand the flow of the market, using the flow, using the pattern, candlesticks types and everything. Okay, so don't memorize, try to understand what is happening in the particular candle, who is dominating, who is present more, buyers are dominating or sellers are dominating, buyers pressure is there or sellers pressure is there. So approach the market in that logic. Don't approach the market with the logic of memorizing the pattern names. Okay, and also don't ever think that the patterns going to work 100% of time, because patterns not going to work. The logic is going to work, so you need to understand the logic, and according to that you'll be trading the market. Okay, hopefully this video is helpful for you guys, especially for the beginners. It's a bit long video, but you have to try to understand the logic. That's the reason I created this video. If you like this video, you can like and you can share with your friends also. And uh, and this is the very basic stuff we need. Everyone should understand this. And this will give you the different perspective of understanding the candlesticks market. So don't go with the terminologies. Terminology is not required. Candle names is not required. Only the logic is required. Okay, logic is required, and who is dominating particular candle, who is not dominating. So based on that, you can predict the next candle, and based on that, you can trade in the market also. Okay, this is very basic stuff. So basic stuffs we should get clarified with the basic stuff. After that, only we need to jump into the advanced things. So hopefully this video helpful. We'll meet you guys in the next video with a different knowledge. All right, thank you everyone, bye.